Welcome back to the Deep Dive. Today is Monday, January 5th, 2026, and if you woke up feeling like the world just crammed 3 months of strategy into a single weekend, well, you're not wrong.
Not at all. It is a full spectrum day.
Our sources are pulling us in, completely different directions today. We've got high-cost military action in South America sending markets into a spin.
Then there's this secret battle for AI supremacy, where a $1.4 trillion strategy is being called a dead end.
And we're going to bring it right down to your wallet. The confusing new tax code, how to tackle that holiday debt. It's a lot.
It is. Our mission here is really to cut through all that noise. We're going to be looking at everything from defense contractors and Chinese commodity controls to, the details of unrealized gains taxes.
And even why a couple of overlooked cities in the Midwest and Northeast are set to lead the entire U.S. housing market this year.
And there's a running theme through all of this, and this is what we want you to really focus on. It's this tension between rapid brute force action versus, a much slower, more disciplined and efficient strategy.
Okay, let's start with the bombshell news from this weekend, the story that really redrew the global risk map in an instant.
The U.S. military action in Venezuela.
Exactly. It all ended with the capture of President Nicolás Maduro and his wife, Cilia Flores. They actually appeared in a New York court today,
Pleading not guilty to narco-terrorism conspiracy charges, among other things.
Right, but Maduro's immediate response was to claim he was, quote, kidnapped, and that he's a prisoner of war. This is just unprecedented, the capture of a sitting head of state.
And the global reaction was immediate and very polarized. China was incredibly sharp in its criticism.
They called it a hegemonic act.
A hegemonic act, and warned it sets a dangerous precedent that violates international law. But here in the U.S., the markets, they showed this extraordinary composure.
Or maybe just indifference. The Dow actually rallied today, hit a new record high of 48,977.
That's the paradox, isn't it? How does a massive geopolitical shock like this happen and stocks respond by rallying?
So what's the logic there?
It really comes down to two things: historical precedent and focused opportunity. UBS analysis shows that these kinds of shocks, historically, they have very little lasting impact on the market.
Really?
Yeah. The S&P 500 is, on average, only down about 0.3% a week later, but it's up almost 8% 12 months later. So investors just see it as short-term noise.
They're focusing on the opportunity. And in this case, the opportunity is oil.
Massive Venezuelan oil reserves, the world's largest, in fact, over 300 billion barrels. So, investors are looking past the military cost to the potential economic upside.
Which explains why energy stocks led the gains. The State Street Energy ETF was up almost 3%.
Precisely. And you see these immediate surges in companies that already have a footprint there, like Chevron. They jumped over 5%.
They're the obvious winner.
They are, but this is where that theme of efficiency versus brute force really comes into play. It's a crucial detail. Venezuela's crude is heavy, it's full of sulfur, it's notoriously hard to process.
Right.
So investor Michael Burry pointed out that the real disciplined winner here is refining.
You mean the companies that already have the specialized equipment to handle that specific kind of crude?
Exactly. Valero Energy shot up 10%. Its Gulf Coast refineries are purpose-built for that heavy stuff. They didn't need to spend a dime retooling. They just had the right tool for the job.
So it wasn't the brute force of getting the oil that was rewarded most. It was the existing efficiency.
That's it. And of course, you saw the companies that will rebuild the infrastructure, like Halliburton and SLB, jumping too, betting on huge contracts to come.
And that ripple effect went global. Defense stocks everywhere surged. Japan's IHI Core up almost 9%. South Korea's Hanwha Aerospace up 7%.
Military action signals a willingness to act, and investors buy into that willingness.
Which also feeds into this global commodity chess game. We have to talk about China's move to restrict silver exports.
Yeah, that starts Thursday. They're putting it on the same level as rare earths, which is a huge move.
And you can't overstate how big a deal that is. Silver prices have already more than doubled this year. It's their best run since 1979 because everyone's hedging against a weaker dollar. So why is China doing this now?
Well, by restricting it, China is basically elevating silver to a strategic material. It's critical for solar cells, for batteries, for defense tech. China sees it as a necessary economic hedge, a way to control the high-tech supply chain for the long term.
Okay, that is a massive amount of complexity. Let's shift gears now to the AI arms race, because that's where this battle between brute force and efficiency is just playing out so vividly.
It's a spectacular split in strategy. On one side, you have OpenAI.
The brute force side.
Brute force defined, they've committed to a scale-as-destiny approach. We're talking $1.4 trillion in compute and infrastructure.
And on the other side, Anthropic.
Yep. Anthropic, led by co-founder Daniela Emma Day, is betting on doing more with less. Their commitment is, way smaller, around $100 billion. They're focused on algorithmic efficiency.
So better code, not just more computers.
Better code, higher quality data, smarter post-training techniques. They're arguing the next phase isn't just about who has the biggest supercomputer. And for you, the enterprise user, this matters because they're trying to deliver the most capability per dollar.
That's the strategic split. But here's where it gets really dramatic. One of the godfathers of AI, Yann LeCun, just quit Meta and is publicly attacking that brute force strategy.
The criticism is absolutely scathing. He's calling Meta's new 29-year-old chief AI officer, Alexander Wang, young and inexperienced, specifically in research. He even warned that staff might start leaving in droves.
And the headline here is his strategic warning. LeCun stated very clearly that large language models, LLMs, the tech behind ChatGPT, are a dead end when it comes to superintelligence.
That is a fundamental shot across the bow of the entire industry's dominant model right now.
So what's his alternative? What is he talking about?
He's moving toward what he calls world models. So to clarify for you listening, LLMs learn from text. World models learn from video, from sensory data, from physics. They try to understand cause and effect the way a baby learns by watching the world.
So he thinks true intelligence needs to understand the physical world, not just language.
Exactly. And from his perspective, that makes OpenAI's massive spending on LLMs potentially obsolete.
And right as this internal war goes public, Amazon jumps into the fray.
They did. Amazon officially launched early web access to Alexa Plus on Alexa.com today. This puts them in direct competition with ChatGPT, with Gemini, all of them.
So what's their angle?
It does all the things you'd expect, quick answers, trip planning. But crucially, it also centralizes smart home management. They're betting on their existing ecosystem of devices and pure convenience.
Okay, that's the trillion-dollar side of things. Let's bring it down to earth and talk about what's affecting your paycheck this week, starting with the 2026 IRS tax brackets.
Right. So you've probably heard about these changes. They're required inflation adjustments. The income ranges for the two lowest brackets went up by about 4%, and the higher ones by about 2.3%.
And that's on top of the 2017 tax cuts being made permanent and some other withholding changes. So, bottom line, what does this actually mean? Are we getting a raise?
Well, yes. Folks will see slightly larger paychecks, but we have to do a reality check here.
It's not going to be much, is it?
For most people, experts are saying it might only be a couple of dollars a paycheck. The problem is the current inflation rate. The CPI was up 2.7% in November. So if your tax bracket adjusts by 2.3%, you're not really gaining any new purchasing power, you're just treading water.
And that frustration is fueling tax battles at the state level. In California, Silicon Valley is fighting the proposed 2026 Billionaire Tax Act.
This is a huge one. It's a one-time 5% tax on net worth, and this is the critical part, it includes unrealized gains.
Okay, you have to explain unrealized gains for us.
It means taxing wealth that's only on paper. So think about a startup founder whose company has a high valuation but isn't public, or a tech worker whose money is tied up in stock they can't sell yet. This tax would force them to pay 5% on that illiquid wealth.
Which means they'd have to sell off huge chunks of their companies just to pay the tax bill.
Absolutely. And that's why even the Democratic mayor of San Jose, Matt Mahan, is against it. He's warning it will just drive entrepreneurs and their companies right out of the state.
Okay, switching to monetary policy, it sounds like the Fed is about ready to pause its rate cuts.
That's the signal. Minneapolis Fed President Neel Kashkari said the central bank is nearing the point where it should stop. He said the key rate, which is between 3.5 and 3.75%, is pretty close to neutral right now.
Neutral meaning it's not stimulating the economy, but it's not restricting it either.
Right. He's trying to balance two worries: persistent inflation on one side and a cooling labor market on the other. It's a very fine line to walk.
It's a balance we all have to deal with, especially with January bills rolling in. The average holiday debt this year was $1,223.
A tough number. And this is where that disciplined financial efficiency comes in. Instead of just the brute force of paying high-interest credit cards, we have 3 concrete strategies for you to attack that debt.
Okay, first up, a balanced transfer card.
You want to look for cards with a 0% introductory APR. Citi Simplicity is a good example. It offers up to 21 months interest-free. That lets you pay down the actual debt without hemorrhaging money to interest.
What's the catch?
There's usually a transfer fee, maybe 3 to 5%, so you have to factor that in.
Okay, strategy 2 is a debt consolidation loan.
This is great if you have multiple high-interest debts. You bundle them all into one loan with a lower rate, which makes it much easier to manage. Lenders like Avant are worth a look because they're pretty flexible on credit scores.
And finally, you have to attack the root of the problem with budgeting apps.
Exactly. Tools like Monarch or You Need a Budget, YNB. They use what's called zero-based budgeting, where every single dollar gets a job. Savings, spending, debt payment. It stops future debt before it even starts.
All right, before our last segment, let's touch on the housing market because the 2026 forecast is a little surprising. National prices are only expected to rise about 2.2%.
But the real story is in the Midwest and parts of the Northeast. We're looking at double-digit growth projections in some cities, all because of inventory shortages and just plain old affordability.
So where are the hotspots?
The top two are Toledo, Ohio, projected to go up 13.1%, with a median home price just under $200,000. And Syracuse, New York, is expected to climb 12.4%.
Why those cities?
It's a demand shock hitting a supply lag. Their home prices are way below the national average, so buyers are migrating there, but new construction really stalled in those areas after 2008. So now you have a surge of buyers competing for very few homes.
Okay, time for our final segment. We're hitting health, corporate strategy, and some very heated domestic politics. Let's start with a major shift in health policy.
The Department of Health and Human Services, led by Secretary Robert F. Kennedy Jr., announced they're dropping the number of recommended vaccines for every child. They cited the U.S. as a statistical outlier compared to other nations.
But medical experts are sounding the alarm on this one.
They are deeply worried. They fear this will lead to a drop in vaccination rates and, as a result, a rise in preventable diseases like the flu, HPV, rotavirus. It's a very controversial move.
Meanwhile, in the weight loss market, things just got a whole lot more accessible.
This is a huge efficiency play. Novo Nordisk launched the first oral GLP-1 pill, the Wegovy pill for weight loss. The key number is the price. $149 to $299 a month cash.
That's a fraction of the cost of the injections.
A tiny fraction. The injections have a list price around $1,000 a month. So this low-cost pill completely bypasses the affordability problem and could massively expand the market.
In the corporate world, Chick-fil-A is turning to nostalgia to boost sales.
Yeah, their growth slowed a bit in 2024, so for their 80th anniversary, they're launching their biggest campaign ever, centered on nostalgia. They're bringing back old favorites, and they're giving away a Golden Fan Cup free Chick-fil-A for a year.
Wow. And on the auto front, GM is still the top seller in the U.S.
They are, but the interesting story is Stellantis' Jeep brand. It saw its first annual sales gain in the U.S. since 2018. That's a huge sign of a brand turnaround.
We also saw Comcast's media spinoff, Percent Media Group, IPO on the NASDAQ.
Yeah, under the ticker VSNT. It had a rough first day. It fell 13%. Their whole strategy is to diversify away from dying pay TV and focus on news and sports, but it looks like investors are a bit skeptical.
Okay, let's wrap with two really intense domestic political stories.
First, the Pentagon is moving to cut Senator Mark Kelly's military retirement pay and issue a formal censure.
This is over a video he made.
That's right. He told service members they have the right to refuse illegal orders. The Pentagon called his statements seditious. It's setting up a major constitutional fight over military discipline.
And in Minnesota, that massive Medicaid fraud scandal, we're talking $9 billion. It's finally claimed a major political figure.
Democratic Governor Tim Walz has dropped his re-election bid. He cited the intense scrutiny and said he needs to focus on fixing the fraud.
And that scandal even spilled over into the corporate world.
It did. The Department of Homeland Security publicly slammed Hilton Hotels after a hotel in Minneapolis canceled reservations for DHS agents, citing their work on immigration enforcement. Hilton stock actually dipped about 2% right after that.
We have covered so much ground. From Venezuela and the surge in silver and defense stocks to the controversy at Meta over its new AI chief. Looking across all of it, that core tension is still there.
It is. The high-cost brute force action versus disciplined strategy.
It's the perfect way to frame the day.
I mean, you see it so clearly. You have the brute force of the Venezuela military action and OpenAI's $1.4 trillion bet. but then you see the immediate market reward for pure efficiency.
Like Valero, the refiner, surging 10% because it was already optimized for that heavy crude.
Or Anthropic, with its whole do more with less philosophy, betting that algorithmic discipline, not just money, will win the AI race.
You have the godfather of AI himself saying that the race for raw scale is a dead end, that the real winner has to deliver performance per dollar.
Which brings up the big question, I think. For everything from tech to geopolitics to your own finances, when the market rewards the most efficient operators after a high-cost shock, is the real dividing line no longer just about who can spend the most?
But who can maintain the most sustainable, efficient execution?
Exactly. So the question to think about is, what area in your own life are you prioritizing brute force over disciplined efficiency?
That is a great note to leave on and a question we're thinking about. Thank you for diving deep with us today. We'll see you next time.